All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market wrap up. It is 8 a.m. I'm sorry, wrong clock. It is 11 a.m. Eastern Standard Time on Friday, 6/3/2022. Before we get started, I would like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. And of course, trade responsibly. What's up, Yoda? Good to see you. Appreciate the loud and clear in the chat. Obviously, if you are tuning in, make sure to smash up that like button. And I'm assuming that all of you are already subscribed. If you're not, what are you waiting for? Go ahead and subscribe. That being said, lots of activity going on in these markets, and we are seeing quite a few of the plays that we've been watching taking place or playing out, however you want to word it here. So, honestly, markets have been very predictable, and we have been able to capitalize on them quite a bit, especially as of late. But going into the future, that may not always be the case, so we need to be watching, for signs of potential moves to the upside, to the downside, key supports, resistances, and obviously practicing all of our good policies to make sure that none of these moves catch us off guard. What's going on, Sohil, Asodos? Good to see you guys. Sohil says, hey, at the gym, got a notification going live. Who said you can't mix business with pleasure? That's right, man. Yeah, nothing like some podcasts or, streams, etc. While you're hitting the gym or doing something else productive. No, I am definitely a advocate of multitasking myself. So that being said, let's go ahead and jump on in and take a look at these markets. So we see two very important things taking place that are the key things that I'm watching right now, and that is the TNX and the DXY. So the most recent rally that we saw in stocks, commodities, cryptos has been directly or inversely correlated, I should say, with the most recent move in TNX and DXY. So TNX and DXY have been going parabolic, treasury yields and dollar index. Recently, they've had this little cool off, and now they're flipping back bullish again. So we know what that means. When they're going down, the markets can go up. When they're going up, the markets are under pressure. So anything that relies on interest rates as interest rates rise is going to come under more pressure. And, anything that is traded against the dollar or DXY, essentially, fighting the strength of the US dollar, world reserve currency, again, is going to suffer if the dollar is going to the upside. So we see TNX, hard buy signal coming out of the bearish control zone. We basically got what amounts to a bullish reset. I've went over it quite a few times, but essentially comparing this previous low to this previous low right here, indicator oscillator came down to around the same level. But obviously price action did not come down nearly as low. So the indicator oscillators have reset all the way down to the bear zone, all the way down to the neutral or zero zone. And now we're seeing the move start to progress back to the upside. So that being said, as long as TNX is strengthening, as long as DXY is strengthening, it's going to put extreme pressure on the markets. And we're at the point now where we're literally, weeks or a month, maybe months, arguably, away from a confirmed technical breakout on TNX and DXY. And we know that's a breakout of basically a 40-year trend. And we know that if we break out of those 40-year trends, we're essentially looking at a condition that no one has experienced in the United States since the late 70s, early 80s. And in many ways, it is even unique from that situation. So if we draw from history for an idea of what we can expect going into the future, if we start looking at the 70s or the 40s or some of these other periods in time, we can look for some parallels. But even then, we see some distinct differences. So that being said, this is the area we're watching on TNX. So we're essentially at resistance. We came up and we tagged it with this wick right here. This was the 2018 top. And this is when, they were in auto mode hiking rates. And then Powell had to pull back and start lowering the Fed funds rate. And that's when we see this drop taking place. And that was the capitulation that eventually led into COVID. This is November 2018, right around Christmas time is when the markets were struggling, obviously. And then, we see obviously at that point in time, they lower rates all the way down to basically zero in the Rona dump. And then since then, we've gone absolutely parabolic. And now we're threatening that previous high. And of course, we know that every time you have a descending or downtrend or like a descending resistance or channel or something like that, that the most important thing to pay attention to for a breakout is taking out the previous high. So again, if we take out this 3.2 roughly level, I mean, continuation to the upside at that point in time becomes essentially imminent. So let's actually switch over to, we'll look at TLT really quick. So TLT now obviously is under serious pressure. It recently had a slight move to the upside, again, directly inversely correlated to what we see on, TNX, obviously, which is the 10-year Treasury yield, and this is the 20-year Treasury bond. So the moves are going to be similar but inverse, even though they're looking at two different time periods for the actual bonds themselves. But that being said, it's trying to carve out a bottom right here. This thing is extremely beaten down, but we're struggling to maintain the support. We talked about as long as we were back inside of the blue channel, ascending channel, or threatening to get back inside of the descending or white channel, we had a chance to basically rally from this point, come back up here and put in a decent high. But at this point in time, we have broken down from the descending white channel, and we have actually broken down from the blue channel. We reclaimed it, we broke down from it, we reclaimed it, we broke down from it. So, it looks possibly like we can find support here, but this is not what you want to see, like a strong support from a key level taking place right now. And, obviously that corresponds to like the weekly 200 exponential and simple, etc. So let's actually jump over now, and I want to look at the DXY because it's so relevant right now. So again, the DXY and the TNX have been trading correlated, and again, they have been putting pressure on all other asset classes basically. So we recently saw the move we expected in DXY. We got up over 104. That was our target. We made it up to like 105, and now we cooled off for a little bit. Again, we're seeing what looks like a bullish reset taking place. The indicator oscillator trends all the way down to the level that we were at back in January, on the 13th of January. And at the time we were at 95 basically on the DXY. Now we're at 102. We're at that same level. So essentially the indicator oscillators have trended all the way back to like neutral or below neutral. Meanwhile, price action has gone, essentially parabolic. So now we have reset the indicator oscillators. Price action has come down slightly, not nearly as much as it went up, obviously. And now it looks like the trend is ready to commence again. Now, it is possible that we have continued sell-off here. We see a rejection. We come back down. We stay inside the bearish control zone, consolidate for a little bit. But at this point in time, we're basically either going to get one more stab down and then we start moving up here, or we're just going to start moving up here. We don't know which one, obviously. This looks slightly less bullish than TNX does, as we didn't get the 821 cross back to the upside yet. But obviously still paying attention to this and still very bullish on this on longer time frames. So that being said, let's jump back over here. I'm going to turn off TLT's chart. We'll look at US oil. So we were talking about this break on oil. We basically broke out on oil. We came back down. We found support at that key level. So this is what we're discussing. It looked like we were breaking out and then failing to hold support. And it looked like it could be essentially a fake out or failed breakout. But we actually rallied back up by the end of the day and closed above the support. So what was previously resistance is now acting as support. So I don't see anything stopping oil from going higher. I mean, at this point in time, we're going to threaten these recent highs right here and probably go to new all-time highs very soon. Obviously still very bullish on oil and energy. And the talks from OPEC are basically trash. The decisions that politicians and the 0.1% are making right now are all horrible for affordability of things like gasoline and other various energies. So again, we saw all of these sanctions take place, and it was like, oh, we're going to hurt Russia with all these sanctions. And then it's like, okay, who's actually getting hurt? Not Russia the country, not Russia the government, Russia the people for sure. And then what about all the rest of the people around the world that have nothing to do with this? Sure, they're all paying the price as well to essentially punish the Russian citizens. So when it's all said and done, we put a bunch of sanctions in place. What does that cause? Well, it causes a bunch of illegal behavior. One, because whenever you make something illegal, people will go out of their way to profit on it. So we're going to see a ton of like black market oil sales and a ton of shadiness and et cetera, et cetera. We're seeing Russia, making more oil than they have in the past and making more money off the oil they have in the past. So obviously the sanctions have completely failed. And then on top of that, the Russian people are suffering. Well, are the Russian people the ones that are attacking Ukraine right now? I don't think so. I mean, are the Russian servicemen that are dying the ones that are attacking Ukraine right now? Sure, they're doing their job like any other serviceman would, the same way Ukrainian servicemen are doing their job defending their country. So sure, if you want to punish the Russian people and the Ukrainian people, with higher prices and death. You want to punish the entire United States, Europe, the entire world with, higher prices and potentially death from, lack of living conditions, whether it's, overpriced energy or lack of food. Sure, you're doing a great job. So far, the sanctions are doing a wonderful job making regular people pay the price of what's going on right now. So, regardless of where you stand on that situation, that's obviously your decision. I'm not here to tell you one way or the other, but the fact of the matter is all the sanctions are doing right now is hurting regular people all around the world. So that being said, are all of a sudden we're going to reverse policies on this stuff and go back to normal? No, I don't see it happening. I see it getting worse. So like a couple months ago, things were bad. Things were getting expensive. It was rampant speculation in energy space. And then what happened from there? Basically now Russia is being sanctioned again. So now the EU is essentially saying, okay, now we're going to buy only 10% of oil. We're not going to buy it. And it's going to happen over the next 12 months, etc. So you're going to basically sanction more when the sanctions already are doing the opposite effect, not working essentially. And then going into the future, things are going to get more and more expensive because the sanctions are really going to take place over the next 11 or 12 months or something like that. So essentially, I would expect over the next market is obviously forward looking. So maybe over the next 6 to 9 months, we continue to see the prices rise. And then as the sanctions are fully into effect, maybe we start to see some of the pressures come off or maybe something changes. But the fact of the matter is right now, until we see some serious policy change right now, whether it's everybody else ramping up oil production or something useful that is actually going to affect the supply-demand dynamic in a positive way, I don't think anything's going to get any better. If all we do is continue doing things that are causing the price to go up, then if we continue to do those things, we would assume that the prices will continue to go up, which is why, again, I'm very, very bullish on energy mid to long term going into the future. And also completely, without a doubt, we're going to be going into recession because we know that, every single time we have massive spikes in oil or energy prices, we go into recession. It causes recession through demand destruction. So that is what I'm expecting. That is literally what happens every single time. So, obviously just going to stick with the facts on this one. That being said, going into the Dow Jones, so we talked about the monthly and how important some of these levels were. We obviously got a nice little pop up here. Since that time, we basically had a sell off, a pop back up, a sell off. So we're basically just we're oscillating for the last 5 days now. We basically just been moving inside of this tight little range. We have the low here at 32.7. We have the high here at 33.3, and that's it. So essentially, what happened? Well, we hit a bottom right here, and then we had, 5 days up, and then we've had 5 days sideways. So what does that tell you? Is that super bullish? Is that super bearish? I mean, to me, we're not seeing much of anything. We're basically at support, back retesting resistance or trying to hold support where we previously failed to hold support right here. And we're just in the center of the range, in the beginning of or the middle of a, retest of the top of the range, the 200 exponential and simple, bunch of green histograms. Bullish control zone, price isn't really going anywhere. What does that tell me? Well, it tells me we're just probably consolidating before we see slight continuation. Overall, not particularly bullish on this move. I think there is still a couple percent here in the pipe. But, this can easily underperform. Keep in mind, we are clearly in a bear market. So we would expect underperformance from the majority of these assets or, in this case, indexes. So, 3 to 5% move to the upside, still viable? Sure. But what is the threat to the downside if we already topped out or if we top out somewhere in between there? Well, a retest of the lows and then probably, the next Fibonacci level down. So 10.5% downside. So we're looking at 3 to 5% upside from where we're at right now or 10% downside. Obviously the play here is to, is to the downside. As the risk reward is twice. So SPY basically doing the exact same thing, trying to bounce up here to resistance inside the bullish control zone, all green histograms, nice little bounce, now just going sideways for a week. If there was any strength in the market, the last thing we want to see is a nice pop off of the lows and then just 5 days of consolidation doing nothing. We basically would want to see a breakout, an immediate pushback up. This tells us now, what are we seeing here? Here we hit lows and then we bounced and we saw day after day after day of just slowly moving up here as we had buyers coming in. And then, of course, we topped out and then, sellers came in much harder. So now here we are trying to move back to the upside. And again, we're just not seeing that buying pressure come in the same way that would give you the impression that we're at a bottom, because we don't want to start to, basically like put in what amounts to essentially a V bottom and then just consolidate right above it. That's not good. We would expect people to be like, if this is actually a bottom, the mentality is, oh, that was the bottom, I got to get in. Let me go ahead and start adding to my position or taking a position or building a position. That's just not what we're seeing. We're seeing consolidation. So for each day of buying, we see a day of buying right here, then we see 2 days of selling, then we see a day of buying right here, then we see a day of selling. So, there's just as much as basically neutral right now between the buyers and sellers. We're just going sideways. And if this was a bottom, that's not what we would be happening right now. So, are we even going to get the majority of this move or the remainder of this move? I mean, I honestly don't know. This is not what we want to see, is consolidation at these levels. As the indicator oscillators continue to trend up and run out, they're using precious energy to do nothing right now. So when they run out of that energy, it would make sense that we just go down, because we already used all our up energy to go basically, nowhere. So once we run out of that up energy, the down energy liable to push us much lower. So we got to be real careful here. IXIC again, looking very weak. All these dailies look okay. This is like the signature you would expect to see. You're like, oh, that's great. All green histograms coming up on the zero line above the slope line. Stochastics coming out of the bearish control zone. Hard buy signal trending to the upside, almost inside the bullish control zone. 821 getting ready to cross the upside. That's all like super bullish stuff right there, right? All good stuff. But the market, the price action is not responding in the way that it normally would if the market believed what the indicator oscillators are telling them. So it tells me that the market right now is like, yeah, we're moving to the upside, but we're using way too much energy. We know it's not sustainable, so the next real move is going to be to the downside. And that's what I'm seeing when I look at these charts right here. So next we have the Russell, again doing the same thing. I would expect this one to continue underperforming. All green histograms above the slope line, above zero line, bullish control zone. And yet where are we going? Nowhere. We're going nowhere. So again, if we look at what's the remainder of the move going to be to the red box, 200 exponential or simple moving average, what happens if we break down from here? Probably just a retest of that yellow support, and then, obviously continuation. So I don't see anything bullish in these markets right now. XLE consolidating at the highs, obviously at 90 still. Next target to upside is 100. Would not be surprised to see a cooling down. If oil holds support though, I think XLE continues to move to the upside. XTN transportation, again, just going sideways, doing not much of anything. We see most of these charts look the same. Bear market, attempted bounce off of a new low, 821, potentially crossing to the upside, consolidating while the indicators and oscillators trend to the upside. And yet, here we are basically at the support that we lost, and now it's acting as resistance. So if we do bounce up from here, a quick move up to like 84 would be realistic. But again, it seems more likely than not that we're going to see continuation of the downside over the coming weeks. XLF financial, again, we got the cross to the upside. We're trying to move up here. You would think with the 821 cross taking place and all the bullishness on the indicator oscillators here, you would think that we would get at least a quick retest for 200 exponential and simple. Again, that is not what we're seeing. So we're not seeing buyers come in the same way that we have previously or typically would. XLV healthcare, again, just getting rejected, 200 exponential and simple. This one is like behind the rest of the markets. So we'll see essentially if we look back a couple weeks or a couple months ago, this chart is doing what a lot of those charts were doing, getting the initial retest back up of the 200 exponential and simple and getting rejected. So the next move typically is a retest of the lows and then a breakdown from those lows. And then we get similar to what we're getting now, another attempted retest of a 200 exponential and simple. So at this point in time, the, basically like double-headed head and shoulders, it looks likely. We have an underperformer so far here. We could still obviously have, a move up to that shoulder. But right now, it looks like we're putting in a weak right shoulder. So if this comes back down to the neckline, this is going to look like a very, very weak right shoulder. And it's going to look very likely that we do break down from this levels. And then we can start looking at like the, 382 or at least that initial touch of the 236. But this is not what we want to see. We're not seeing strength here. All the indicators, all the oscillators on daily time frames are in a bullish posture, and yet we're not seeing any bullishness throughout the space. So again, that's what we watch out for what we essentially call a bearish reset. XLU utilities still looks pretty strong here, trying to retest the highs. Obviously, we're seeing a little bit of, we're pretty elevated on the indicator oscillators right here, and so far no divergence or anything, getting rejected off the heart line. But it does look like this is looking to roll back over here. So it looks like basically the markets are trying to build momentum and it's just not working on price action, but we're seeing it build up on indicator oscillators. Not what we want to see. Again, not what we want to see. XLP consumer staples trying to reclaim 200 exponential and simple. We're basically neutral right now while we're at this level. If we see a breakdown from this level and lose the 200 exponential and simple, we enter into a bear market. If we can rally back above this level, we likely come back up and revisit the highs. Obviously, I think if something is not putting in a new all-time high right now or hasn't recently, I don't expect it to put in a new all-time high anytime soon, for the most part, on almost every asset. So if you're not currently putting in all-time highs, I don't see anything on most of these charts telling me that suddenly things are going to put in all-time highs that aren't already. XLRE, again, looking very weak right here. A breakdown from support. We came all the way back up, retested that support as resistance now, and it looks like it's failing. Again, we're seeing, a lot of momentum, a lot of positive signs on the indicator oscillators, but we're just not getting the same picture from price action. So we're seeing a divergence between what the indicators and oscillators are telling us and what price action is telling us. And typically, what happens in the end? Well, eventually price action usually wins. So that's what we're expecting to happen here. So jumping over to Tesla next. Obviously, Elon came out and basically said like, hey, we're not hiring anymore and, we're going to get a recession. I mean, I think the man's right. He obviously deals in business, has his fingers in the pie, so to speak. So, it makes sense that he's going to basically say, hey, we don't need to keep hiring people right now. So, obviously job market maybe cool down a little bit. Maybe that will cool down demand a little bit as the Fed raises rates and everything. I think at this point in time, you have to be delusional to think that we're not going into a very, very difficult time going into the future for investing, as we're going to basically see, we've been seeing quantitative easing for the last 40 years straight, and we're about to experience quantitative tightening essentially more extreme than we've ever experienced in all of time. This is the most aggressive quantitative tightening that has ever taken place in history, and yet the markets seem to think, well, we've already discounted all that. Everything's fine. We're off. Everything's fine. It's good. Well, okay, we're just now, for the first time, basically now, starting to see what the bond market is going to look like without the Federal Reserve as a buyer. So the bond market has been, obviously the Federal Reserve's balance sheet has gone parabolic. Why does it go parabolic? Because it's been buying, basically treasury bonds and mortgage-backed securities. So that has been forcing the price of bonds and the yield of bonds in opposite directions. So the price of bonds goes up because there's demand from the Fed. The yields on bonds go down because they're inversely correlated. And that's, obviously for the mortgage market as well. So if suddenly, all of a sudden, we no longer have the Fed as a buyer because they've been tapering their buys, and now they're essentially going to become a net seller because they're going to be letting these assets run off their balance sheet. So they're essentially just not repurchasing or refilling the balance sheet as these things essentially like expire. So you essentially have like a limited time asset on your balance sheet. Normally what the Fed would do is, as they mature, or, quote unquote expire, they would essentially just say, oh, that one's no good anymore, or that one's done, or whatever. So now we're just going to go replace that with a new one. Well, not only are they not replacing them with a new one now, previously they were buying, making the balance sheet bigger. Now, not only are they not buying, they're going to actually just let these things expire, so run off. So before we had the Fed as a net buyer, and now we essentially have the Fed as a net seller. So even though they're not literally selling assets off of their balance sheet into the market, the effect is the same. The effect is the same. It's that same bathtub situation that we always talk about, where you get the same effect on the water level inside of a bathtub, whether you turn the water higher or lower, or whether you open the drain more or less. They have the same effect on the water level. So if the water level is at 50% and the faucet is on and the drain is open, which is normally, that is a situation that takes place when the Fed is essentially doing what they're doing right now. There is half a bathtub full of water, and that's the Fed's balance sheet. And then there is water coming in through the faucet, and that is essentially the Fed buying new assets onto the balance sheet. And then there's water coming out through the drain, and that is basically just assets expiring off of the Fed's balance sheet. So essentially what was happening for, the last like 40 years, sometimes more than other, but especially for the last 2 years, is the Fed has had the drain cracked open still, but has had the water on full blast. So the water level in the bathtub has gone from 50% to 150%. I mean, it's like literally overflowing. It's at record levels we've never seen before. Okay. So now what is about to happen is the Fed is shutting off the water. They're no longer filling up the bathtub or filling up the balance sheet with new assets. So the balance sheet is not going to get bigger. And now what they're doing is not only do they have the drain open, they're actually going to start opening up the drain more over the next 3 months. So the initial assets running off the balance sheet for 1 month, and then it doubles the second, and then it will be triple the initial amount on the third. So that is the Fed just opening the drain up more and more. And keep in mind that the water has been completely shut off. So the liquidity pool, or the Fed's balance sheet that is essentially in the market right now, is about to get smaller. So the Fed is essentially going to start sucking up liquidity out of the markets by becoming essentially a net seller instead of a net buyer, or by opening the drain and shutting off the water. So what we're going to see going into the future is we're going to see the water drain out of the bathtub, or the assets drain off of the Fed's balance sheet faster than we have ever seen in history, faster than ever has happened in history before. So obviously that's bearish, because the Fed becomes essentially a net seller of mortgage-backed securities and treasuries. And the Fed has been a net buyer for the last 2 years / 40 years, but especially the last 2 years, like record net buying. So we're going from record net buying that drove the asset prices up to record net quote unquote selling, or essentially the Fed letting more assets run off their balance sheet than ever in history. So if the net buying more than history drove prices to record highs we've never seen before, it would reason to say that if all of a sudden we're going to see the opposite take place, that we may see the markets go lower, maybe not than we've ever seen before, but lower in relation, or deeper, or, more pressure on them. So that being said, that's what's taking place right now. So if the Fed is no longer going to be a net buyer of bonds, and they're going to be essentially a net seller of bonds, we would expect rates to continue up and bond prices to go down, as suddenly there's much less demand and there's much more supply. So if you take away the biggest buyer of bonds, and then you see what the market's going to do afterwards, and that buyer's been in the market for the last, 40 years aggressively buying, we don't know what the real demand is going to look like. And then you throw in a bunch of these geopolitical events and everything going on, and suddenly China might not be that big buyer of bonds. Russia definitely not going to be that big buyer of U.S. bonds. So how many other foreign governments not going to be a buyer of U.S. bonds? So now we have taken away the biggest buyers, as in other governments, and then we have taken away the biggest buyer record level, as in the Fed. So now we have all the buyers gone. So who's buying all these bonds? Who's going to be buying these bonds going into the future? I don't know. Is the Treasury going to start issuing a bunch of extra bonds because they need money to pay for all these deficits? I mean, seems likely to me. So we're going to have more bonds coming onto the market. We're going to have no Fed in the market, who's the biggest buyer. And then we're going to have very few, if any, foreign governments, or at least major ones, buying as well. So we're going to have more bonds than ever being issued, most likely. We're going to have less foreign governments than ever buying those bonds, most likely. And then we're going to have the Fed not buying those bonds, and they're the number one biggest buyer ever. Or so they've said. They're not going to be buying them. So that being said, we have 3 massive, massive headwinds in front of us right now. And we haven't even begun to see what's going to happen with them. The Fed is not even, it's technically neutral right now. So let's see what happens. But, in my opinion, looks very, very bad going into the future, at least like short to midterm. So, and if you don't see that, or you don't understand that, please look into it, research it, and try to really understand that the trend we've seen for the last 40 years was all completely reliant, 100% reliant. The only reason we saw the trend that we saw take place over the last 40 years is quantitative easing. And we are going into right now a record quantitative tightening. So not only are we not going to be doing quantitative easing, we're going to be doing the opposite, quantitative tightening. So expect all the liquidity sucked out of the market. So now expect to see liquidity events, or, issues with companies, countries, individuals not having the liquidity they need for their daily lives, for their businesses, for their whatever. So very, very crazy times right now. That being said, hopefully that has been enough kind of trying to drill that point home. Like people are talking about, oh yeah, bottom's in on assets. Everything's good now. We're seeing buying come in. We've had nice pullbacks. Things are down 50%. I think that's a tradable bottom or a macro bottom. Everything's priced into the market. So, okay, sure. How did we price everything into the market, including something that's never happened before in our lives? So did anyone, including the Fed, think that we were going to rocket to new all-time highs after the fiscal and monetary stimulus of the government and the Fed, in the Rona dump? No, nobody thought that. Obviously, if they thought we were going to rocket to the upside this much, they would have done less because it was completely overshot and unnecessary. They obviously went too hard or we wouldn't have massive amounts of inflation right now. So that's all obvious in hindsight. I mean, it was obvious to a lot of us in advance, but it's obvious to, extremely well-paid, hundreds and hundreds of the smartest people on earth that are supposed to know all this stuff. It was obvious to them now after it already happened. It was obvious to just, regular people way before that because we're not fucking morons. So that being said, if they couldn't anticipate what was going to happen to markets with the liquidity that they pumped into the system, what in God's name makes anyone think that not one soul on God's green earth knows what's going to happen when they suddenly do the opposite thing at the most extreme level we've ever seen after 40 years of easing? Now we're going to tighten. So we overshot massively to the upside unexpectedly. So, I mean, are we going to overshoot to the downside massively unexpectedly? I mean, I would say probably yes. It would make a lot of sense that, the same way that they fucked up and completely, screwed the pooch on the way up, that they are probably going to do the same thing on the way down. So, and if you look at the credibility, the viability, and, the amount of times in the past that the government or Federal Reserve has made correct decisions, I think their track record is probably like 3% or something like that. So whatever they say is going to happen, you're probably better off just counter trading that because they are always wrong. So that being said, again, none of this financial advice, kind of a deep dive on what I expect going into the future. But it just blows my mind because I know people want to be ambitious and they want to buy the dip and they want to get excited about markets and, you don't want to miss the bottom, et cetera, et cetera. But I mean, the truth is there's nothing in these markets right now that's telling us all of a sudden we're just going to turn around and everything's going to go gravy. Everything is pointing the other direction. Everything says we're fucked. But that being said, Tesla, so what are we doing right now? Are we putting in an inverted head and shoulders? Are we getting ready to shoot back up and retest 200 exponential and simple? You guys know how I feel. Obviously, I think that is the case. We're going to be coming back up here, retest the 200 exponential and simple, complete our, dead cat bounce. And then after that, probably going to go lower. But right now, obviously, we have a pretty clear neckline right here, a pretty clear head right here, and now we're putting in our shoulder. So, basically another potential opportunity to enter a position on Tesla for a, momentum move back up to retest the 200 exponential and simple, another 20 to 30% from where we're at right now. Could we go slightly lower? For sure, I would expect basically as long as 680 holds or somewhere around there, I would expect this to be a buying opportunity for a scalp back to the upside. But this is 100% just, Tesla's lagging behind everybody else. It's just now confirming into a bear market. And we know this is the last bullish trade we typically take on an asset, which is the reversion to the mean. We break down from 200 exponential and simple. We put in a new low. Eventually, we revert back to the mean, and then we look at that as a selling opportunity. That's the last bullish trade that we take, and then after that, we expect lower highs and lower lows, until they stop. ARKK, again, just complete trash. There's nothing really even to see here. This thing is pathetic and weak. NVIDIA across 821 back to the upside, obviously got some signals that we're going to get this push back up. So we do expect a retest of like 220 to 240. Not much changing here. Again, we're spending an awful lot of momentum, an awful lot of our energy going basically nowhere. So is this going to underperform? Is it just going to roll over? We don't know, but it does not look strong right now. Apple, again, same thing. Apple has stayed stronger than most throughout this bull market. Now here we are confirmed into a bear market, and we're essentially just getting the initial reversion to the mean test. So what are the two scenarios that could really happen right here? We either get the remainder of the move back up here to like 160 or something like that, and then, top out, and then we roll over, which is typically what happens, or we underperform this move right here, we roll over, and then eventually we get a new move back up and actually make it to 200 exponential and simple, which by then will probably be much lower. And then obviously we could just break out to the upside and then go parabolic. But that's easy. We know what needs to happen for that. If we're going to go bullish on Apple, all of a sudden, what are the signs? Well, the 821 crosses back to the upside. Step number one. We retest the 200 exponential and simple. Step number two. We get back on top of the 200 exponential and simple. Step number three. The 200 exponential and simple flip back over blue. Step number four. And then we start to retest the previous high and the all-time high. Step number five. And then blue sky breakout. That's easy. Everybody knows that. I don't have to tell you that because you already know. What do we need to see for bearishness to happen? Well, nothing, right? Because we're already below the 8 and 21. We're already below 200 exponential and simple. The next thing is just basically a retest of the lows. And then if we break down from the lows, we have to look for another key area to retest, either a previous high or another previous low, or maybe a Fibonacci level, or maybe a weekly moving average. But the fact of the matter is that a bunch of stuff has to happen for us to be bullish in these markets. Nothing has to happen for us to be bearish in these markets. So again, it's very, very clear these markets are bearish until they prove something otherwise. Google looks very similar to Apple. Essentially same thing, lagging behind, staying stronger for longer, but now looks very likely we either get our move back up here now or we roll over, fail, and then eventually we'll get that reversion of the mean later. So it's now or later. It's just a matter of where the 200's at when we get there. Amazon obviously had a pretty aggressive dump. We talked about the, reverse or the 20-1 split rather, and potential for that to give a bullish rally. Again, same thing. We could either get the bullish rally, come back up, retest the 200 exponential and simple, or maybe we just roll over from here. It's already priced in, and we just go down. Because maybe this was the split priced in right here. Maybe nobody cares about the split because it's just the same pie cut up into more pieces. Lots of possibilities here. So Microsoft obviously got our move back up, tested resistance. This one has basically completed the move that we were anticipating. It is possible we get a slightly higher push up here to retest 200 exponential or simple. Again, been staying strong for long, but now looking fairly weak. Basically just conforming to the overall consensus on the market, which is we are clearly in a bear market. Next, we have Walmart. Obviously, Walmart still looking like trash. Unable to basically do anything. Sort of filled this initial gap right here, so it's a start. I don't just suddenly think Walmart's going to start crushing it or anything. Same with Target. Massive, massive gap right here. Is it possible we come up and fill the gap? Sure. But, again, if this was just going to be like a bottom and then it was like, oh, that was great opportunity now and everybody's just going to add to Target and then we're immediately going to go back up and start testing resistance or closing gaps, there would be some kind of momentum already. Instead, we got rejected off the 8, and then we got rejected off the 8 again. And now here we are still below the 8. The 8 and the 21 are very far from each other. 200 exponential and simple aggressively pointing down. Nothing telling me right now that we're just suddenly going to be like super bullish on Target. Now, obviously, could this just jump back up here and close the gap and come to 210 again? Sure, it 100% can. It 100% can. And I love playing gap plays. But that being said, we're just not seeing any kind of strength right here. This really should have, after we took out this close right here, and then we close higher than it, we really should have, if there was any momentum or any buying pressure on this stock, we should have at least come up here and retested the 21 and that previous low right there at like 180, 183, somewhere around there. And we didn't even get that. We got immediate rejection. So is it possible we consolidate here long enough and then we get that push up and then we potentially close the gap? It for sure is. But again, we're going to see it coming. We'll see it happening over time. Right now, it did one positive thing and then it gave it back. So, there's definitely some opportunity on these things. If you loved, Target up here at 265, or if you liked it at 265, you should love it at 165. It's $100 cheaper now than it was just a couple weeks ago. So that's great. So why all of a sudden, if everybody loved Target so much and it was so great this whole way up, why all of a sudden when you get a $100 discount on Target, does nobody want it? Because there's a reason that Target was just discounted by $100. There's a reason. This is, this was basically the market. People always talk about efficient market theory. If the market was so efficient, we wouldn't have just had this massive capitulation move and lost $100. The market was offsides on Target. Well, why were they offsides on Target? Because they thought everything looked good because there was no chance of recession and the consumer was strong. Well, why would they think that Target's strong and everything looks gravy when we have been closing below the 200 exponential and simple and confirming into a bear market? Because they're delusional. They're not using, technicals. They're not even using fundamentals. They're just using fantasy. So when we come up here and put in another, we put in basically bearish divergence, break down from 200 exponential and simple, come back up, put in a lower high, and then begin to break down again. So what was this capitulation move? Was this because of Target's guidance? Was it because of Walmart's guidance? Or was it because that was already going to happen no matter what? They could literally have said nothing or said everything. And essentially what happened? We confirmed into a bear market. We came back up, tried to stop the bear market from happening by rallying above the 200 exponential and simple. We put in a lower high rejection. We then lost the 200 exponential and simple. We consolidated for a couple of days. And then smart people, anyone intelligent that uses technical analysis anywhere close to what I do or anything remotely similar to what I do, essentially sees this and goes, well, that's it. Bear market confirmed. We rally back up and try to stop it. The rally failed, and now we're going lower. So then you target this level as a new low. That's what we're going to at least retest that. Probably go lower because now we have a high, a low, a lower high. We would expect lower low, and then obviously capitulation. And then it's like, oh my gosh, what happened? Oh, this is crazy. Looks like the retail maybe not as good as we thought. People are spending on other stuff, but the consumer's still strong though. That's definitely still true. They're just strong, but spending on travel instead of goods. And, they got too much inventory, but not because the consumer's not buying it because they're not strong. It's because they're buying other stuff instead. And it's not because they only have so much money and now they can't buy both. It's because the consumer's strong. They're just choosing to spend their money on other things, but they are strong. And then what's the next, basic thing that's going to come out? Well, then they're going to come and say, well, it looks like actually maybe the consumer is not that strong. And, all that strength that we saw from the consumer and the buying and spending on credit cards was actually not because the consumer was strong and confident. It was the opposite. It was because the consumer is weak and scared. So now they're suddenly racking up credit card bills, trying to buy food and gas to feed their families and go to work. So the, mainstream swing is that the consumer's strong. Look at all this credit card debt. Look at all this spending. Look at all these numbers. And then when we actually look at it and break it down, it's like, oh, wait. So is a strong consumer racking up massive credit card debt that they've never had before, higher levels than we've ever seen in all of history? Is that what a strong consumer looks like? Because I would say that's probably what a pathetic consumer looks like, that has a bunch of things they can't afford. And so they're forced to buy those things on credit or pay for those things on credit so that the man doesn't show back up and take that stuff, whether it's your car, whether it's your house, whether it's your furniture, whatever it is. But that's the facts of the matter. So you can spin it however you want. But the fact of the matter is the consumer looks like shit right now. And I mean, most of you guys obviously are consumers in one sense or the other. But I mean, most of us have friends in high places and friends in low places, or at least acquaintances. And I'm going to tell you the truth right now, most of my, wealthy friends have become extremely wealthy and are doing fine, but are seeing clear slowdowns in their businesses. And then, most of my younger or less established or less fortunate or less wealthy friends are really suffering right now. And who's really, really suffering right now? Well, a lot of, I don't like calling people low class, but not like they don't have class, but they're lower in the class, caste system. A lot of these lower class people with multiple children are being forced or driven to, reliability on the government, which obviously is the last thing we want because the size of the government is what has caused most of these problems. Obviously because of deficit spending and, financial engineering, etc. So that being said, let's take a look at our cryptos. We have talked quite a bit, obviously, about the macro trends and everything. But again, we see a couple of days of positivity in the market, which we expected. We discussed it ahead of time. We talked about how everything was at support and we expected bounces back to the upside. But again, everybody was extremely bearish at support. And then, of course, we're extremely bullish at support. And then the move plays out. We get a nice bounce off of support on basically every asset out there. We get the pullback on the DXY and TNX that we've been discussing. And now everybody went from super bearish to super bullish. So everybody's always on the wrong side of all these trades because they're morons. None of them are using actual technical analysis, the one thing that actually works in the markets, and people don't believe on it. So, it is what it is. So anyway, our Bitcoin futures chart, nothing has changed here. We're still consolidating around those levels. We discussed about basically getting, we got this pop to the upside. I discussed about how I expected to essentially that candle just get wiped out in a single candle afterwards. It happened. We got another pop up. We get another complete wipeout right here. So what does this say? Is this bullish? Is this bearish? Again, we're seeing our momentum indicators and oscillators continuing to trend to the upside while price action goes sideways. Not good. We're going to use all our energy just to stay sideways. And then finally, we're going to run out of energy and there's going to be nothing to hold the price up. And at that point in time, we're going to see a big capitulation move. And that's what it really looks like the markets are setting up for. And that being said, here we are again, still under the 8. So I told you guys, basically the next move would be a retest of the 21. We retest the 21, we get rejected, we come back down to 8, and now here we are losing the 8. So we still have the, 5 hours in the day before futures closes, but this is the last place we want it to close now. We want it to close back above the 8, ideally up at the 21, around like 31,275. Do I think it's going to happen? No. What I think is more likely to happen is we just close somewhere around this range right here and nothing happens. And then over the weekend, we get some price action. Come Sunday, the price action gets completely invalidated, and then we start back over right around the same level. But eventually, we're sitting on support right now. So we're just hanging out on our support. And if we lose this support, we know what happens. The second we lose this support, we capitulate. So here we are. We're just sitting at the same support that we came down to right here. Not good. That's not what we want to see happening. And for all the people that have I've done all these macro trends and everything and what we're looking at right here. And the most important thing to pay attention to is, this is obviously the futures chart right here. I use this as an example for the different, strategies and everything like that. But the most important thing, the absolute most important thing that I cannot stress enough that's taking place right now is, when we moved into the bull market right here, we got back on top of the 200 exponential and simple. 200 exponential and simple went into a bullish posture, and then we were bullish from that point on. So this is an extreme bullish buying opportunity, obviously. And we don't have to talk about it in hindsight because we can see it in real life. And then this right here was our attempt to cross back up to start that trend over again after we went negative. But what happened? Again, we got rejected, we went lower, and then we confirmed into the bear market. So what do we really need right now? We need another one of these, because this is the opposite of when we get that blue circle that tells us we're extremely bullish. This purple circle tells us we're extremely bearish. So what happened really, we confirmed into a bear trend here right before the Rona dump, and then obviously lost 50%. We were able to capitalize on that, because of our simple strategy that even a child could follow. And then after that, again, confirmed into a massive bull trend, massive gains to the upside. And then here we confirm into a bear trend again, and then, fake out, move back to the upside, fake out again, and then move back to the downside. So the same way that we expected parabolic moves to the upside, when we get that blue circle right here, we would expect parabolic moves to the downside when we get that purple circle right here. So is this just literally the confirmation? And now we've went down a couple percent from the beginning of the bear trend. Well, look how much we went up from here. This confirmation took place at $9,000. We went from $9,000 to $70,000. And then here we're confirming basically from 40-something thousand dollars that there's no bullishness left in this market. So do we have to go back down to 9,000? No, we do not have to go back down to it, but it would make reasonable sense that we give back a certain percentage of that move. So what is it going to end up being? Well, we don't know. When we come from the bottom right here to the top right here, we know the 236 we already violated. That was that key support at 36,000. So we know the 382 is our next level of key support. So 24,000 is really where this is pointing to for the next level of support. And then after that, probably around 16,000. So when it's all said and done, we just keep it simple, consistent, do the same thing over and over again, and we just let the market hand us money. And it works. So next we have Bitcoin on the daily. Again, for the Bitstamp chart, it looks exactly the same. We're basically just hanging out at support. So this is the last line of defense that we're at right now. So if we break down from this last line of defense, it's going to look extremely bad. And then again, some people were asking recently about leading and lagging indicators. I discussed it some. This was part of the reason. I don't know if I mentioned it on Wednesday's stream. This was part of the reason it was so obvious that this move was going to get given back is we saw the knife stab up here, and this is a leading indicator, the knife is. We saw a knife stab up here to ridiculously high levels, like 93, and then immediately, when we see the aggressiveness of that stab right there, we can look back and say, okay, this was the last time the knife was pretty aggressive, this was the last time the knife was pretty aggressive, this was the last time the knife was pretty aggressive, and this was the last time the knife was pretty aggressive. So let's look at what the knife was telling us and how it resulted in the markets, and if the knife is right about stuff. So this was the last big knife stab right here. Real aggressive one. What was that? Well, it was the exact peak. And where did it tell us that it was the exact peak? It told us one candle before the peak. So it told us in advance that this was going to be the exact peak, while we were also getting bearish divergence taking place on our indicator oscillators as well. So it's basically saying, hey, just so you know, the market's getting ready to roll over aggressively, and it's actually just total trash, and it's lying to you. So get ready to get dumped on your face if you're long in the market. But obviously people don't see that. because they don't use technical analysis. Obviously, no one else has access to the knife except for group members or people that use my indicators. So that being said, next time we saw the knife stab was right here. And again, continuation after that. The next time we saw an aggressive knife stab was right here. And again, that was kind of like a little bounce back up retest, came back down actually to a higher low. And then the next time we saw the knife stab was again at this peak right here. And you see exactly where the knife stab lines up. It's just, once again, one candle before the absolute top. So, doesn't always call the exact top, but it will either call the exact top or it will tell you, look for the next stab up and divergence between the two, because that's going to be the exact top. So again, not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. But again, right here, the knife stabbed up. And where does it peak at? One candle before the absolute high. So, everybody wants all these cheat codes and leading indicators and all this stuff. And then they don't realize that, they already have amazing cheat codes and leading indicators. They're too busy looking for something else when they have the best thing right in front of their face already. And, even though the updated version of the Jewel Thief is not available to everyone for free, it's only available to group members, the old version of Jewel Thief still works phenomenally well. It just has a couple less features built into it, but it still has all of the main components. You can get the TJD TDMACD for free. You can get the Jewel Thief for free. And you can even get, the SAR with B pivots, which uses these moving averages and a bunch more. It's just not as simple, as useful, as easy, and it doesn't encompass the full strategy like the TJD Master does. So even if you're not in the group, there's still no excuse to not be using the same strategy, if that's what you deem appropriate. So that being said, again, we're seeing that bullish candle get wiped out. We saw this big bullish move up here get wiped out. We're back at support. So, obviously we expect Bitcoin to go down substantially sometime in the very near future. And it's literally, we're at the lows. We're just waiting for the next bad news or next event or next selling or whatever it is you want to go by. It's just a matter of time. What is going to get said right now that is bullish for the markets that's going to suddenly make crypto take off? Another country adopts it. The Federal Reserve starts buying Bitcoin as a world reserve currency. More regulation, an ETF. I mean, any of those things could be possible for a bullish move to the upside. Are any of those things likely? Is there any anticipatory regulation coming out that's going to be good for crypto? No. And the truth is, if crypto suddenly gets regulated, it's going to be bad at first. It's going to be really bad. And then it's going to be good afterwards. So long-term effects will be good. The initial move will be bad. Unless people are like, oh, this is great for crypto, even though it's going to crash the prices. Long-term, it'll be better. So I'm going to counter-trend the move, and then we'll just inverse it. I mean, you get in your own head trying to do stuff like that, saying, what is the market going to think if this happens? And then the market's going to do the opposite, because bad news is good news and good news is bad news. So if it's bad news, then really it's good news. So I'm going to counter trend the good news. So then it actually is bad news. That you're not going to make any money doing that, trying to figure out psychology in the market like that. You have to have consistent ways that you can tell these things. So that being said, Ethereum is at the lows. It is more bearish. We're at the wick low right now, and it looks pathetic. It looks exactly the same. Looks like we're going lower. Honestly, we just looked at all this stuff the other day, and there's really no reason now. We took out the peak right here, as expected. Weekly is continuing to trend to the upside. Nailed this move 100%. This basically was the cheater chart. Anybody that looked at this chart and did the technical analysis we did on it, it was very clear that basically the crypto market was getting ready to melt down. And we were able to utilize that essentially as a pre-indicator or a directional indicator as what was going to happen in crypto. Because everybody was like, oh, we're going to 100,000. No, we're going to 20,000. And then everybody has some theory, but nobody can back it up or has anything from the market that's telling them direction. So everybody's very, very confused from these levels. The big talk was, we've been consolidating between 30 and 60,000 for so long, we're putting in a base, so we're going to go higher. Well, if we're putting in a base and we're going to go higher, this chart wouldn't look like this, in my opinion. The same way we're able to use the gold-silver ratio chart, we're able to use the Bitcoin dominance chart to make these markets our bitch. So if you're not using this chart or you don't understand how it works, you need to do a deep dive into why the relationship is so important between these, and compare them to our previous cycle lows, and how this chart reacts and what that looks like on the actual Bitcoin or crypto charts. Because at this point in time, this is confirmed breakout on triple bullish divergence basically in a descending channel or wedge. We broke out of that wedge, and then we took out the previous high. So the next thing we do is threaten the next previous high. And then after that, what do? Retest 200 exponential and simple, complete the measure move, etc. So again, markets are very, very simple right now. I mean, this is probably the easiest the markets have ever been. The reason it's not exciting right now is because they're easy, but they're going down. If they were this easy going up again, we would see complete euphoria in the space. So total crypto cap weekly, again, we fully expect a retest of a 200 exponential and then eventually a drop down to 850 million, barely hanging on to 1.2 trillion. And we should be at 1.08 trillion very, very soon. Very, very bearish chart. This looks absolutely pathetic. It's actually like equal to or worse than the way the Bitcoin chart looks like right now, but very, very similar. For these altcoins, there's really nothing to see here right now. Avalanche, very bearish at the lows. Matic, very bearish at the lows. We did have a spike lower than this, so at least we're not at the spike right now like we are in like Ethereum or like AVAX. But again, we're at support and it looks very, very weak right now. Solana, again, very weak at the lows, like already came back down to where the wick is. Another failed. Solana had more issues again recently. The chain went down. I mean, this is trash. This is complete trash. Doesn't mean it won't be good in the future, but right now the chart looks like trash and the project looks like trash. So, what is the bullish sign behind Solana? It has a pretty name. It says soul and the sun and the heart of the universe. So it's the best crypto. Hooray. Okay, sure. All right. That's a great reason to buy it because it has a clever name. Awesome. XMR, Monero, again, retesting the 200 exponential and simple. It looks very weak. This thing is in serious damage control on the monthly. So the daily looks okay. It looks better than most, but you got to be real careful for that thing. Algo, again, complete trash. Back down here at 618. A bunch of support through here, so it may hold up better than most. XRP at the lows, at least not at the wick low, but again, complete trash. Trying to build momentum while it goes sideways to down. Bearish reset taking place right now. Big fake out coming, I think, in these cryptos. ADA, Cardano, again, complete trash. Bouncing key support. Looks like it's ready to roll over. Couldn't even stay above the 821. A daily close above the 821, and it probably does get a retest of like 90 cents. But doesn't look like it right now. Matter of fact, the way this knife stabbed up here right now, we're probably close to or already topped out on this most recent bounce. And again, we see, this is another perfect one where you can look back and see, here was a big knife stab to the upside, calls the absolute top, and then capitulation. Here's a big knife stab to the upside, calls the absolute top, and then capitulation. And in advance. It's telling you the top in advance. Okay? It's telling you one candle before the top every time. Here we get a little bit more of, notice right here as we have a bunch of candles just kind of sideways to slightly up. But we can see we actually print some pretty aggressive bearish divergence between this peak right here and this pathetic little peak right here, which was the top. And then again, finally, we have one more big spike to the upside, and that was basically that was actually the exact top. And then we've just been kind of coming down. So again, everybody that wants these indicators to let them know what's going to happen ahead of time, you have it already. You just have to use it. And you can turn off the stochastics and just use the knife. If it's too much to look at or too confusing, or, you just, it doesn't catch your eye right, you can go in there and turn it off. Oh, God, why does TradingView act a fool when I try to expand these out sometimes? I hate TradingView. It's such a piece of shit. That being said, KNC next, very, very weak. This moves to the downside and then reversion of the mean, very, very weak. And then Hex, obviously, just looking like complete trash. So we were talking about this last stream, how basically if it did not stay above that support line, it was going to look like it was about to melt down. And here it is, back down below it, came back up, got rejected. Looks like it's ready to go lower. So we expect it to bleed back out to that 4 penny target in the very near future. And then we have our gold chart. So gold got a nice little pop up, and now here it is coming right back down. Again, all these strings trying to break out. Going to be very, very hard for any of these assets to actually go up while TNX and DXY are strengthening. So if you want to know why your assets are underperforming, well, it's because DXY and TNX are no longer rolling over. So the little bit of weakness in DXY and TNX gave the market a bunch of strength, and now they're showing weakness again. So what is that going to do to the markets? The markets can be showing weakness, in my opinion, very soon. Again, monthly close is terrible. The gold looks bad. Silver looks much, much worse. Silver looks very, very bad right now on pretty much every time frame. Gold-silver ratio, very, very bullish, telling us gold is going to appreciate in relation to silver. So maybe they're going to learn how to, make silver out of dirt, and they'll just have like a little ray they shoot at it, and they're like, how much silver do you want? And it's like, I don't know, man, fill up that thing right there. And they're like, okay. And they fill it up with dirt, and then they shoot it with the ray, and then the ray turns the dirt into silver, and then that's why silver is going to be less valuable in the future. Or, and that's possible, or maybe an asteroid of silver comes from the sky and lands somewhere, and then we just have tons and tons of silver, so that drives down the price. Those are possibilities. Unlikely. Or maybe gold is just going to go down in the future and silver is going to go down much faster. That's a possibility. Seems much more reasonable. Or the final possibility that actually makes sense would be gold is going to get extremely valuable going into the future. Silver is going to appreciate some, but not nearly as much as gold. So any one of those scenarios, some more realistic than other, would tell us why this chart looks the way it does and why it looks like gold is going to be appreciating substantially going into the future in relation to silver. Next, we have ACB continuing to melt down. I told you guys I did take a position or started to build a position from these levels. I do still fully expect slightly lower target. I'm looking at this 1.618 Fibonacci extension to the downside as a key buying area potential target right around like $1.40. So we're almost there, but again, these things are so beaten down. I am fully expecting any positions taken around these levels to pay off. And even if it's an M&A situation or just goes back to fair value or just eventually goes up, these are going to be some of the best investments we made. Or they'll go to zero. Tilray next. Tilray, nothing really has happened since this one. Still holding on to key support. I really would like to pick up Tilray at the lows or possibly even slightly lower than that. I don't know if it's going to happen. Seems likely at this point in time. Hard sell at support. It looks like we're about to just melt down further. Any point in time, though, expect pot stocks to basically have a 20 to 50% rally, and don't be surprised at all. That being said, Hexo, 25 cents, almost at our support level here. So we've been paying attention to this Fibonacci extension. We're so close to it, 2.236. Not one of my personal favorites. I prefer 2.5 or 2.618. But, again, this thing has been absolutely just melting down. No signs of a bottom on any of these pot stocks yet. But, still it doesn't mean they're not at value areas. CCJ, again, just consolidating on top of 200 exponential and simple. Nothing has changed here. All the way up in the bullish control zone, just hanging on to the moving averages. URA, retesting them, slightly less bullish. Probably giving, here's the truth right now, okay? CCJ is giving us probably a little more bullish of a picture than we should have. It's probably lying to us a little bit on the bullish side. URA is probably telling us close to the truth right here. Basically like neutral to bearish at this point in time. UEC, again, kind of lying to us a little bit, giving us a little bit more of a bullish picture right here. UROY, lying to us a little on the bearish side, much more bearish. So we see a blend of basically bullish, bearish, and bearish neutral, and they're all kind of right around that level. So in my opinion, the weakest ones have already broken down or are showing that weakness, like UROY, and the stronger ones are kind of holding up and trying to, posture up here above the 200s to show strength. But the real truth is, basically the overall market of these, the same as we look at like the semiconductors, the strongest one like NVIDIA is going to stay stronger for longer. The weakest one like Intel is going to just always look like trash and then occasionally be like, oh, look, it's not down as much. And then, that's the same thing in the uranium space. The strongest ones are going to try to portray a bullish picture. The weakest ones are going to tell you the truth or maybe even a little more bearish. And then, the actual truth is somewhere in between. So as far as I'm concerned right now, these are basically neutral at this point in time. MO Altria, again, still very bullish long-term on this one at resistance at this point in time. Still looks like we could have a little further of a pullback. But, again, very, very bullish on this going into the future. And then KHC, Kraft Heinz Company. So we talked about this one a little bit and potential for a scalp trade to the upside. If this area holds, what has happened in the last 2 days was exactly what we said we were going to find out in the next couple of days to tell us whether or not we want to take this trade or not. So we don't want to just jump into this trade and assume support is going to hold. What we said was if this ascending support line holds, if this key Fibonacci holds, if the 200 exponential and simple hold, then we want to take a potential scalp back up to the next fib. That's not what we're seeing happen though. We have this key support right here in blue with 3 touches right there, and then here's our 4th touch. The initial breakdown from it, we rally back up, and then we couldn't hold it, and we're breaking down. This is very bearish to me. So we have a new low on the closes right here. We just lost 4 key levels of support: 200 exponential, 200 simple, ascending support, and our fib level. So again, this does not look good to me right now on the short term, like daily chart. Now, again, we looked at this one on longer terms, though, and there's definitely some potential here. If we hold above 200 simple, we probably retest the 200 exponential, chop around here for a bit, and then maybe we could break to the upside out of what amounts to a, 5-year bear trend. And then when we look, but again, when we look at it on this scope, it's like, well, wait a minute, that's not good. If we close here, we basically just lost support and we're closing below it. We lost the 200 simple, we're closing below it. Not what we want to see. And then again, when we look at it on the monthly here, we're basically at the neutral zone. We're crossing the 821 up, down, up, and then we're about to cross it back down again. So, we're very close to picking a direction, but we're at the neutral level. We're at the 382 right now. So we talked about it before, how this could be a potential entry. That's obviously not going to be valid because of what's happening right here. So we have to really start looking down at these, at our next target to the downside. And then, from the next target to downside, we can then potentially look at the next target to upside. It's possible we find support here and then see the next target to upside, but that was our hypothetical right here if this holds support. And it could still happen. Maybe this is a fake out. We'll see how the weekly closes, but I do not like to see a weekly close below support like that, especially with so much support at that level, and then we just lose all of it. So we'll see what happens over the next couple hours for that weekly close right here. And then from there, we can kind of look at what's really going on like longer term. So this has potential. There's definitely some nice risk reward trade setups here for Kraft going into the future. But we're at that decision point basically right now where, in my opinion, it's coin toss. Equal distance to the upside and to the downside, and no legitimate bias in one direction to the other. If anything, I would say the bias is still to the downside slightly. So, all right, man, we flew through them today, right? We went super long on some of the last streams, so I was trying to talk a little faster and rip through here. We also did some super deep dives on Bitcoin, crypto, and a bunch of other assets, macro and micro, on the last stream. So that one went extremely long. I think that one was like almost 3 hours. It was a very long stream. So that is worth like busting up into a couple pieces and watching for a little more in-depth look. But that made it so we didn't have to go as deep into this one because not much has changed, in a day. Jay Hoff in the comments, what's up, brother? Good to see you. He says, thanks for another great rundown. Could you take a quick look at Waves USDT? Oh yeah, I feel like you asked me to look at Waves instead of one of the other ones, and I forgot to swap it out. One sec. I'm not sure what has good history on this. Let's try KuCoin maybe. Take a look at that one. Matter of fact, you know what I can do? I think that was one you had asked me to add to the lineup. All right, so looking at Waves right here. So let's zoom out and take a big picture look here first. All right, so we're definitely in a very dangerous position here. We just put in a low right here before that all-time high, and then we came down and we technically took out that low. Now, barely, so arguably you could say we closed at the low or slightly lower, but we're going to just call that a same low, which you can do. It's obviously a slightly lower low, but, you don't want to just get crazy with it. Maybe it's liquidity, etc. So let's just say we're at support. So as long as this support is holding right now, it looks okay, but we're basically just consolidating at support. So if we get a breakdown from this level, we have to start looking at previous closes on like the monthly or previous fib levels, to the downside. If we get a pushback up from here, we'll look at the 821 or like some of the shorter time frame, resistance, support, moving averages, etc. Let's take a look at this. So, it looks to be fairly accurate. We see quite a bit of, wicks are touching, closes are touching like pretty perfectly on the whole way up here. So now we've actually put in the high. We can look back in hindsight and say, okay, this looks very algorithmically driven, which is why we were touching all these specific levels as resistance and support. So when we came down to 0.5, for that initial retest. Then we finally put in the high. So now we actually have the full cycle. And then we come straight down to 236. That was a key support. We just blow through that, blow through the 382, close below it, try to push back up, blow down to the 0.5, and then overshoot it. Now, I can tell by these candles that, there's probably not a ton of liquidity in waves. I don't know a ton about most of these shit coins, but I'm assuming that the order books are probably pretty light with some of these candles on here. That being said, we can see on the shorter time frame on this weekly, this is perfect. We're at support right here. We can see the weekly interacting like very clearly with a lot of these. So right now, what's it look like? Well, it looks like the weekly had a reflex rally back up, and then it's just getting rejected. So what is this move right now? It's exactly what we talked about. I literally said how every asset looks the same right now. They just look varying levels of the same. Everything that's 95% of assets, anything that's not energy, looks exactly the same right now. It just looks varying levels of bad. So why does this one look varying levels of bad? Well, again, we just put in a new all-time high, and then we came down to a new low. So we now have, the lowest low of this cycle up here since we put in the high. And we also took out all of our base lows that we had previously going back to basically inception. So here we have basically, a push up right here, and then something acted as resistance right there. We consolidate, and then we finally break through it. Well, what happened here? We capitulate through support. This was our support that should have held. This support should have held. We blew through that the first time, put in a new low. So now there's no respect here when we come back down to it. So then we do come back down to it. It gets no respect. We blow through it. This one gets no respect. We blow through it. So what really happened? We retested support right here. So this was resistance on the way up, and it acted as support on the way down. And it did a very good job of it. It saved price action. And then what happened? We push all the way back up. And where did we push up to? Well, previously we had support right here, and now it's acting as resistance. So we wicked all the way up. The wick got rejected, and now here we are back at that resistance. So right now the resistance has won. We still have a couple days left. Obviously, this will trade over the weekend, but let's just assume this closed and that was it. What would this be telling us? Well, it tells us we came down to support. The support held. That was, one of our last supports that we had available. We came back to resistance. Resistance held. So now most likely what's going to happen, we're going to just come back down and revisit the 618. If the 618 holds from there, then maybe we move back to 0.5 and then we get the push to the 382. If the 618 fails, we retest the lows, and then we probably come down to the 786. So there's a couple paths that this can take right now, and none of them are necessarily like definitive. But again, the way it looks like to me now is we come back down here and retest it, and then we come back down here and retest. And then if we break through that, maybe we put in a higher low, and then we can come up and do something like this. Don't mind the little like 5-wave structure I'm using right now. I'm just using it because I get to draw a bunch of lines for a single click. So we could do something like this. This would be like a neutral bullish situation right there. Okay. And then for like a slightly more bearish situation, maybe we get rejected right here, bounce that, come back up here, or put in a lower high right here. And then we break back down, retest the lows. And then we come back up, retest this, acts as resistance now. And then maybe we put in a new low, and then we find support around some of these key levels. So again, those are some of the possible things that could take place on this. But overall, the daily and weekly chart, or the weekly and monthly charts, don't look particularly good. Now in the daily, we cross 821 back to the upside. It looks exactly like every other chart. Oh, we're building momentum, all green histograms, hard buy, 821 crossing. It's all bullish, right? Everything's great. But is it though? No, not really. Because where are we at right now? We're substantially lower than we were at, the last time we were up in these regions. So we have to be real careful with this one. Although it's trying to build momentum, and we see, essentially we put in some nice bullish divergence through here. But did the bullish divergence already played out, right? We already got a big pop to the upside. So what do we expect? All of a sudden this thing just goes bullish again to the upside? No, I don't think so. I mean, this thing is wrecked right now. Look at what just happened to this. I mean, it just went down 93.6%. So it's trash, right? It literally put in a new all-time high, and then 70, not even 71 days. It literally went from putting in an all-time high to a new cycle low and down 94% in 58 days. So nothing that you want to ever invest in, buy, or speculate, or participate in, nothing goes down 94% in 60 days that you want to ever own for anything? You know, I mean, you can scalp it, sure. But I mean, what is the reason that this dropped 94% in 60 days? Because whatever the reason is, I don't care if it's a legitimate reason or not. You could be like, well, the project imploded. It got hacked. You know, the founders dumped. You know, whatever you want to say about it. None of those things are an explanation or reasonable reason why you would ever want to participate in an asset that goes down 94%. And you're like, yeah, but it just went up. That's why I participated in it. That's why I'm paying attention to it, because it's up. I want to buy this because it's up 176%. I'm excited about this because it's up 176%. I already bought it and I'm up 176%. Sure, that's great. You're up 176% to a substantially lower area. So even if you just held this whole time and then you went down 94% and then you went up 160%, you're still down 85%. So what is this? What is this project? It's trash. It's garbage. It's literally bleeding out. It's dead. Its throat was slit and it's like doing death throes right now. It's like a Kill Bill movie. There's like blood squirting out everywhere, but like somehow our character is like still alive, but only just for a moment to take like a couple final steps or something. That's this project. It's dead. Its throat was slit. It's murdered. It's killed. 90 something %, you know, in 60 days. I mean, I can understand why somebody would be like, well, I'm just scalping it or whatever, but there can't be anything fundamentally good about this, or it wouldn't have went down 96% in 60 days. So I would be very, very careful with trash projects like this. I mean, this is like, you know, this is the future of, you know, I mean, this is like a Terra Luna all over again. The only difference is it just hung on to that last 5%. Instead of going down 99.9% to zero, it went down 95% and then had a little rally. But it's dead. It's a dead crypto. There's anything that's down this much is a dead project. You know, even in like the stock market, you know, look at something like Peloton or whatever. Maybe somebody comes in and buy it. Maybe they fix their plans or whatever. But if it was a legitimate company, if it was a legitimate business, if it had any kind of future, it wouldn't be down 95%. You know, and things can come back. I mean, look at MicroStrategy. It went down 99% when Michael Saylor got in trouble with the SEC, you know, and bought his way out of prison for being a lying scumbag piece of shit. And that went down 99.9%, and it rallied all the way back up to another lower high. You know, and if you bought back then at the peak, you're now, after that massive rally that it put in, you're only down 85%. So that's pretty good. I mean, this is what those charts look like, or start looking like. So I would be very, very careful with this, man. This looks like absolute trash to me. The fact that it had that aggressive of a sell-off to begin with tells you that nobody gives a shit about this. If there was anybody who cared about this project, it wouldn't have went down 95%. Because I find it hard to believe that everybody cares about it at $4, but nobody gave a shit about it at $64. And in 60 days, all that changed. In 60 days, it went from this project is amazing and I love it and I've dedicated my life to it and it's going to change the world, to now it's worth $4 and it's complete trash. I mean, what changed right here? Is there some kind of news? Any news? Well, what happened? Why'd you just completely melt down to nothing? Oh, nothing, just a little hiccup. Everything's fine now. Yeah, I would be real careful, man. Any charts that look like this, I wouldn't even want to touch. Not with the 10-foot pole. You know, I mean, it's the same thing as like after Luna goes down to zero and people are like, oh, yeah, I mean, it's down 99.99%. How much further can it go? It can go to zero. You lose all the rest of the money you put in it. Or it could bounce like this. I mean, you can make 160% in 2 days. But how do you pick the bottom on this thing? Because it didn't bottom at like Fibonacci or something like that. You would have had to literally be watching this thing and then have guessed that it was going to bottom at the one support that it had left. But I mean, you could have bought any of these 60 candles that it was melting down and, you know, still lost 85% of your money, or 99 depending on how high you bought. Real tough one right here, man. I would not touch this with the 10-foot pole. So, but anyway, hopefully I didn't, call your kid too ugly there, but just trying to keep it real. So, yeah, thanks for that, J-Hoff. J-Tree says, can you take a look at VPCI on a weekly? There's a real estate trust that focuses on casinos. Could be a good recession play like booze and cigs and candy. All right. Yeah, we'll take a look at this one, and then actually going to go ahead and wrap it up there because I do want to keep this one rather short, and I have some stuff to do. So it is VICI. Take a look at this bad boy. All right, VICI properties. Again, let's just kind of zoom out here real quick. Look at that monthly. So we're retesting the previous all-time highs from 2021. Not a lot of history, only going back to 2017. When we look at the weekly, momentum still in its favor. Pretty aggressive, nice stab up there, but it did flatten out here. So, we may be running out of buying pressure, but it's still there for now. If it starts to turn down is when I would be a little more concerned. But typically, the big spikes like this, where we see it shoot up, are the ones where we're going to see it roll over more so than when we see like a plateau looking thing here. So, not doom and gloom by any means. Histogram above the zero, above the slope line. That is definitely good. 821 have crossed back to the upside. And again, it's retesting some of these highs. Looks very, very likely that we are headed back up here to retest the all-time highs at this point in time. For an internal retracement, we did just reach a 786. So this is like the last area of resistance I would be paying attention to for an internal retracement. If we can get through the 786 right here, I mean, the 886 almost never stops price action. And at that case, the only thing you got to worry about is really like a double top or a throw over. But if we can get above the area we're at right now, and this closes in 3 hours and 37 minutes. So if we close right here, we're looking at next week's price action. Is it able to hold support and continue up, or does it get rejected and come back down? Probably gets like rejected and comes back down, but then finds support and then continues up. That's what I would just assume based on, where we're at right now. And then if we go back down to the actual daily, the daily still bullish control zone, all green histograms, blue slope, again at resistance. So it looks pretty tired around here. We did put in a new high right here compared to the previous stochastic push. So no divergence or anything showing up. That is good. We could see continuation on this over the next like couple days to week or month. I mean, it looks okay. It rallied back above 200 exponential and simple. 200 exponential is trying to cross back above the 200 simple. So on a daily, this thing is really trying to rally back up and come back to new all-time highs. Technically, it looks okay. But to tell you the truth, man, I mean, like looking at it right now, it's almost like you're late to the party on this one. So if you already have a position, you're probably in a good spot to like hang on to it and look for continuation. I mean, this definitely looks like a sort of like rounding bottom type scenario. But we'll have to see. I mean, some of the price action that was taking place was pretty brutal. But it does look like it carved out, a nice bottom around this area. And the real entry would have been like the 821 cross. But then even after that, I mean, this was a hell of a squeeze right here. And it didn't quite take out the low with that wick right there. I mean, but this is the type of thing, this was a mad squeeze. 7.5% down, got completely bought back up, and then just went parabolic afterwards. I mean, because look at that swing. That was just to get people out of this trade, because it went 20% since then. So we'll have to see, man. This one's kind of like a mixed bag. I mean, it's okay. It has some momentum and everything to it. But why was it performing so poorly for so long, and now it's suddenly performing well? I really don't know. I don't know enough about it or anything. March 22nd was basically like where this started to roll back up this year. So the last few weeks it's been nice. This was obviously pretty aggressive. I don't know. Honestly, this one really could go either way. I mean, the daily looks okay, and it looks like it wants to go up. The weekly looks okay. Looks like it wants to go up. And I mean, honestly, the monthly does too. So I think on most time frames it looks pretty good, or on all those time frames it looks pretty good. I mean, it basically rallied off the 821 on the monthly. So I mean, it looks okay for now. I don't know that there's like a great trade setup to be had here. And I don't know if you already have a position. Obviously, we just took out the 618, came all the way back down, and then shot up to the 786. So here's the thing with this one. So because there's been such big swings one way and the other, what I would expect from this is, now that we hit the 786, I would expect this thing to have an aggressive move back down, maybe even as low as $27. Maybe it stops at the 382, 28.73. That's probably your buying opportunity for new highs. It could just keep running from this area to new highs, and then you're basically just looking to buy into the momentum. But I think that's probably your best case scenario, is getting an entrance off of like the 382. If you're not already in this, or you're looking to add to a position, you're basically hoping that we get one more retest of like a higher low, and then again, you could be the 236. But every time it came down here and touched that like zero or somewhere around it, each time, so this was the macro bottom, it shot up to the 382, then retested the lows, retested the 382, retested the lows, retested the 382, finally found support at the 236, then shot up to the 618, came down, didn't respect the 0.5 at all, came all the way back down almost to new lows, then came back to the 0.5, respected as resistance, 382 for the first time, respected as support, and then, again, shot straight through the 618, 786. So based on what it's done each other time, I would almost expect it to come back down 2 fib levels. So from the 786 to the 618 to the 0.5, that's the minimum retracement I would expect it to have from here. And then realistically, probably the 382, maybe the 236. But this area in here is, basically, you're buying fair value. You're buying at the 200 exponential and simple. So right now it's slightly overvalued compared to the last 200 days of trading. When it's at the 200 exponential and simple, the reversion to the mean, it's fair value. So, if this is crossing back into a bull trend, which it looks like it is, 200 exponential is about to cross back over 200 simple. Both have a bullish slope right now, still technically a lower high, so we don't get too excited, but it looks like this is the beginning of a bull trend for this. And we know what happens. Well, when we start the bear trend, we revert to the mean and retest the 200 exponential and simple as resistance. When we start the bull trend, we revert to the mean and retest 200 exponential and simple as support. So wherever this tops out, probably right here, short term, I would expect a reversion to the mean retest of a 200 exponential and simple. I would use that as a buying opportunity or, positional add. And then if that holds, I would expect, the position to play out nicely. If it breaks down, I would probably add one more time at the 236. And then if it doesn't rally back up and reclaim the 382, I would want to be out of that position somewhere around there. Keep a fairly tight stop. Don't want to see a new low put in, obviously. At that point in time, if we put in a new low, it's going to be a high, a low, a lower high, and then a lower low. So those are, the area of invalidation is a new low. The area of support is the 382 and the 200 exponential and simple on the daily. And then again, the 236, if this breaks down, I wouldn't capitulate on my trade. I would enter again on the 236. And then if we lose the 236, that's when I would really start looking at this. But again, the risk reward trade setup for like a scalp or something is probably not going to be there, because what are you really looking to do? You're looking to buy the 382 and then you're looking to add at the 236. You're not really looking to get stopped out. So realistically, a new low is what would take you out of the trade. So it's an 8.8% downside, and that's assuming we already come down to our entry, and then it's another 8% to invalidate our potential trade setup. And then what are we really looking for? Well, minimum of the 886 move right there. So we have a 13% upside and an 8.8% downside. It's 1.5 to 1. So the risk reward ratio is really not there. So in order for this to even be like a valid trade setup, it needs to come back down to 236, or you have to run a tighter stop loss. If we did that, then it's a valid trade setup. You have 17% upside if you enter off the 236, and then you have 5.5% downside, 3-to-1 risk reward ratio in a technically bullish trend. So, favorable probability of success, favorable risk reward ratio, but of course you need it to pull back first. So the 236 would be the ideal entry for this. The 382 could be a nice entry as well. But the trade setup's really just not going to be there in the same way. So you have to be looking for, if you're going to buy this thing, if you buy it at the 382, you have to expect new all-time highs, or there's not a favorable trade setup, or else you have to be patient and buy it when it comes back down to 236. And then regardless of what happens, if we take out the low, you just don't want to be participating in this anymore. So yeah, that's basically the breakdown on VPCI properties. I don't know what this is. You said something about casinos. I would be real careful on anything that has to do with retail. A lot of people do gamble, smoke, drink, all that good stuff in recessions and everything. Historically speaking, though, I don't know how that translates to a casino, because I would assume that casinos do much better business when we're in a bull market and there's tons of liquidity than they do when we're in a recession and there's not liquidity. So the same way that you would expect people to smoke more or drink more in a recession, I don't know that it's necessarily true that people are going to be going to casinos and gambling more. I think it would be more likely that, people would be online gambling more, because that's sort of the idea behind like the, alcohol and cigarettes consumption, is people are more likely to consume alcohol, at their house and in more quantities on a regular basis, or smoke more, etc., to kind of ease the pain or get through the tough times, or to spend money on just alcohol instead of paying premiums at a restaurant or tipping or whatever. So that's kind of the mentality. I'm not sure that's the same way with casinos. I would have to probably just look into it a little more, or you could obviously, and get an idea. But as far as commercial real estate, I mean, I wouldn't want anything to do with commercial real estate right now. So for me, this is just an automatic no-go, just because of the sector that it's in. Does not mean that this does not perform well. It just, for me, there's so many head currents for real estate right now, especially like business end of it. I mean, commercial real estate is probably going to suffer bad going into the future, because I honestly don't think that retail comes back in the same way. I think there's going to be a glut of, commercial real estate available, and it's going to get severely discounted on top of everything taking place with interest rates and whatnot, which is also going to cost, big discount. So if retail has already peaked and a bunch of retail destruction took place over the last couple of years, and retail probably never recovers to that same level, then we're suddenly going to have more supply and less demand than we've ever had in all of history for retail, commercial real estate, basically, retail included, obviously. So that being said, it's hard to even try to assume what any of the pricing on this stuff is going to be going into the future. That being said, that we're going to see some of the same headwinds or potential risks for residential real estate, but at least we're not seeing less people want to live in houses the same way we're seeing less people want to rent businesses or places to run their business. So hopefully that's a little deep dive that helps out a little bit. I would look into that and see what's the correlation of casinos or casino related real estate in bear markets, and then you can maybe get a little more of like the macro fundamentals on that. But that is our VPCI. And J-Tree says, I already have a position. I was waiting for a pullback to add. I'm average mid to high 20s, but the rest of the market is bearish, so I'm getting soft hands. Yeah, I mean, it makes sense, man. It makes sense to be a little cautious right here. Sounds like you have a good position. Definitely some potential for add, which is basically what we talked about at that 382, or potentially 236, depending. But yeah, all that goes. So yeah, that's it. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Thank you for everybody who tuned in today. Thank you for all the viewers and all the group members that have showed their support. If you are interested in becoming a group member, obviously you can reach out to me by email. We do have a private Discord group. I know that a lot of the excitement is gone from the markets. I know a lot of people are looking away or just not participating or whatever. You can tell obviously that there's a lot less excitement in the space. Views are down, interactions are down, all that stuff. This is where all the money is made, in the bear markets. So whether this goes on for another couple weeks, couple months, or a couple years, the people that keep on grinding, keep learning, keep putting in the work are going to reap the rewards exponentially, the same way that we did, that pushed through the bear market. When we were at 3,000 and crypto was dead and nobody wanted it, when I was buying Ethereum at $85 and nobody wanted to listen and it was a Ponzi scheme and it collapsed. Nobody wants to participate in the bear markets at the bottoms. It's slow and it's boring and it's quiet, and capitulation has already taken place. And we're going to get to that point in these markets as well. We're not even close to them. There's still tons of excitement. Some has come off, but there is still a lot of excitement, a lot of bullishness. And the truth is, in order to hit the bottoms, you know, the bullishness has to die. We have to reach max pain, max capitulation. And, you know, that could take months, could take years, or, you know, maybe it already happened and we just didn't see it. But that being said, gonna wrap it up there. Appreciate each and every one of you. Thank you to all the group members for their support. Thank you to all the community for such positivity. Everybody have a great weekend. Obviously, more than anything, make sure that you are, 1, protecting your principal, 2, you know, preserving your capital, locking in gains, and, you know, trading with the trend, using risk reward setups for high probability of success, and then also position sizing to make sure that you get to keep playing the game, even if you are wrong about a trade or two. But that being said, everybody have a great weekend. Keep your eye on the US dollar close and TNX close, because if we see strength in those, it's going to put a lot of pressure on the other markets. I do expect, like always, crypto to try to do something over the weekend when, you know, all the adults are gone. They're off for the weekend and the spot market likes to play. So we'll see if we can get some kind of push up here. But overall, crypto not looking good. You know, that new most recent 4-hour close just put in a new low on the 4-hour. So now we have a high, a low, a lower high, and then a lower low on the 4-hour. So again, it looks like we're coming back down here to retest the lows. So I fully expect us to be in like that 28,000 range very, very soon as well. Momentum to the downside. Just nothing looking great right now on the crypto side. So that's it for today. Appreciate each and every one of you. It is Friday at 12:37 p.m. Eastern Standard Time on 6/3/2022. I am Crypto Trend Trader, and I'm out of here. Peace.